Hey, good morning, everybody. At 8:30 a.m., we're going to hook up CNBC so everybody can watch the PCE numbers or data drop. PCE, personal consumption expenditures. The hell does that mean? It means, let's say you own a home, right? The guy that takes care of your lawn, the person that helps you with your pool. That's what these personal expenditures are for you. So again, your lawn care, your taxi, your Uber, things of that nature, services that you use, your window cleaner, your housekeeper, you used to pay her $18 an hour, now you pay her $19 an hour. That's an increase of $1. It's an increase of 5.5%. So that's what we have coming out at 8:30. But let's talk about why I'm here. I'm here to help you be better traders. How the heck do I do that? Well, okay, I share through personal experience. I tell you what I'm thinking. I'll talk about my trades. Let's talk about me right now. 22 straight winning trades, 11 straight daily, day trades, days that I've been trading profitable. Okay, sorry, a little conjumbled this morning. Now let's talk about my trades from yesterday and the conundrum I had. Okay, I was in AMD puts. I expected AMT to go down, but my problem was AMD was going up as the market was just not really sure. Then the market dropped and AMD was still going up, and I'm thinking to myself, maybe I was going to be wrong. Thank goodness I wasn't. AMD indeed dropped, and I'm not even talking about the good drop at the end of the day that took my contracts up over $2. I was in for $1. I got out around $1.30, $1.34. These things went up to $2.25. I had 24 contracts. I left $2,400 on the table. Now here's the catch. All right. I'm a scalper, meaning I get into a trade and out of a trade. So when you decide how you're going to trade, let's say for today, Friday, you have to decide, are you going into a play because it's a 3-week play, it's a 1-month play, you think the stock is going higher, you're buying the option, something to that extent, or are you a scalper like myself? Even somebody that's scalping like myself, how am I going to trade today? I'm going to buy options out till next Friday, till August 4th, because I don't want to get myself in trouble. I buy an option, it expires today. I was wrong about entry. I'm now down 50%. I've got to take a loss. I buy an option, I go out till next Friday. All right, I'm wrong about it today. Yes, I'm down 15%, 18% at the end of the day. Oh, there's a spike right at 3 p.m. because we know the market likes to spike at 3 p.m. 4 p.m. After it sells off at 3:50 p.m. on Friday, it'll spike up. Remember, because all the call holders are waiting for the market to go up, or the market will spike higher end of day. Right? The institutions, they do that to screw you. So expect whatever movement that you're looking for. If the market's being thrown up on today, expect right at the end of the day to get a spike higher. If the market's having a tremendous day and you're thinking about riding your calls over the weekend, I expect the market to drop maybe 3:50, 3:55 p.m. Again, if the market's having a good day, I'll give you both the bull case and bear case scenario. Right now, the SPY is at 455.40, right where we were on Wednesday before the Fed's announcement. Understand your bull case scenario is we're actually going to drop, consolidate a little on market open. First 5 minutes, 10 minutes of the day, you're going to see a drop, and the market's going to rip higher, and you're going to see 459. There's your bull case scenario. Your bear case scenario is, shit, it was right there. We saw what happened yesterday. There was a sell-off. Any increased volume led to a sell-off. So your bear case scenario is, well, shit, we're ripping higher just like we did yesterday morning. Futures are extremely green, looking similar to yesterday. So let's just say, okay, we're at 455.50. We market opens. It shoots up to 457. And then we're back at 455 again, right where we are now. Pre-market still up. Shoot to 457, consolidate right back to 455. Happens pretty quickly within 30 minutes. People think, oh, we're still going higher, and then we're 454, 454, 455, and then we drop to 452. So your bull case scenario is we're dropping 1 or 2 points at open. We're going to shoot up to 458, 459. Your bear case scenario is we're going to shoot up at open, then we're going to drop to 452. Somebody asked me if the Bank of Japan decision,
but you can still do derivatives and hold cheaper capital there and invest it here. And I think that's the issue.
So data, which drops at 8:30. I think we're a little early on that one. But let's add it to the stream. Let's see what they're saying.
Put pressure on the globe with respect to the economy. Most likely, that will come from Japan, and I think that's what we've learned last 24 hours. What pulled the rug out from underneath the Dow Jones Industrial Average streak, or maybe fueled it? basically the cheap capital that we could still recycle out of the Japanese economy at those interest rates and at those levels of stimulus. They really didn't change anything with their lending rates. They're going to make their band a little bit wider. They're denying it's a first step toward normalization, but ultimately I think that's what market participants are going to be leaning towards.
Rick, only 15 seconds, but is it an indication that they think our central bank is about to pause?
You know what? I think that's a very good way to look at it, actually, because I do think there's a lot more coordination, especially with the Japanese being the most stimulative. And yes, I think you're on to something there precisely. We're at 8:30 Eastern. I expect this day to hit the wire, and it is. Well, let's start out with the employment cost index for the second quarter, expecting 1.1%, very close to that, up 1%. Just to give you an idea, this series goes back to 1996. The high watermark forever there, going back to record keeping, was 1.4, and that was in the first quarter of 22. So even though we are down, it goes down pretty slowly. Now, if you're looking at personal income, up 0.5% expected, we end up with up 0.3%. If you look at personal spending expected up 0.4, it's up a little better at up 0.5%. And there are revisions. Income last month moved from 0.4 to 0.5, which makes this a deterioration of 0.2. Spending ramped up also by 0.1 from 0.1 to 0.2, which makes 0.5 up 0.3 from our last look. Now, real spending accounting for inflation is up a solid 0.4, and 0.4 is pretty good on the real side, considering in the rearview mirror is up 0.1. That's a slight revision. This is the second best number of the year outside of January, where it was 1.3. Now, if we're looking for the Moneyball numbers, here they come, everybody. Personal consumption expenditure deflator month over month, expected up 0.2, arrives at exactly up 0.2. The high water mark there was up 1% in June of 22. And that was the highest level since 1980. If we look at that same number on a year-over-year basis, it was expected to be up 3%. It is up 3%. People would have liked to have seen a two-handle here, but boy, that's as close as you can get to a two-handle without having a two-handle. And 3% actually is the lowest level going back to March of 21. In between there, the high water mark was 7% in June of 22. That went back to 1981. Now, these really are the favorites because these are the core. Personal consumption core deflator month over month, expected up 0.2, is up 0.2, exactly as expected. The high water mark there was April of 21, where it was up 0.63. That was the highest since 2001. And finally, year over year, personal consumption expenditure core deflator expected to be up 4.2. It's up 4.1. If you recall, many on our Fed panel were saying they'd like to see a three-handle here. Didn't quite make it, 4.1. However, 4.1 still is the lowest level going back to September of 21 when it was 3.91%. So that's pretty nice progress from 4.6, which remains unrevised. What does the market think? It really hasn't moved a whole lot on these numbers. The equities, though, have held gains. And on the interest rate front, we are below 4%, which was the peak based on some of those stories yesterday that were out there on the Bank of Japan potentially tweaking, potentially normalizing, and it was hard to decipher some of that. I think our contributor, Peter Bookvar, because a lot of that news hit the wires the same time a really nasty 7-year note auction hit, so there was a lot of volatility around 1 Eastern yesterday. Well, gang, back to you.
All right, so let's remove that. So let's start with PCE numbers and personal income. They're basically in line with estimates, so that's not really having any effect on the market. You've heard about the Bank of Japan mentioned yesterday, which basically shook the markets. Obviously, the markets are a little over that. So what I'm watching today is the U.S. dollar, or U.S. dollar right now. Let's just see where the market is. 101.47, okay? Very easy tracker. As the U.S. dollar goes up to 102, which it did yesterday, I expect the market to drop. If the US dollar continues down to 101, and you'll be able to see the pattern today, all right? I'm trying to simplify it for you, how I'm expecting the market to turn out. I'm going to use my tracker, the US dollar. If you do the same thing and you see it curling up to 102, expect the market to drop. If you can see it continue to curl down where it was yesterday, right? Back to 101, 101.18, something to that extent, expect the markets to fade higher, okay? Now, quick, the German market, the DAX, it's the DAX just hit an all-time high yesterday. The Nikkei average, the Japanese market, is 3% from an all-time high. Our markets are 5% from an all-time high. The Chinese market, the Hang Seng, was up 2% yesterday, 2% the day before. So let me tell you what I expect to go on today in the market. Again, bull case scenario, we're going to see the market consolidate on open. First 20 minutes, you're going to see a bit of a drop, and then it's going to shoot up to 459, 460. That's your bull case scenario. Your bear case scenario, and keep focused on volume. Your bear case scenario is something similar to yesterday. You're seeing, I'm not talking about an avalanche or falling off a cliff. I'm talking about where futures are up just like they are now. We're going to spike the first 20 minutes out of open. Palantir, Roblox, Upstart, Affirm, everything's shooting up. And then what's going to happen is we're going to drop and the market's going to consolidate right back to this level, 455.50, and then we're going to end up in the 452, 453 range. Okay, not as severe as yesterday, again, because it would be 456.50 on the high, 452.50 on the low, a 4-point range, something to that extent. Now, how am I going to help you make money today? The first thing I'm going to do is tell you you should be in a cash account. That means you don't have to swing a position overnight or at least throughout the entirety of the day. Cash account allows you to enter at 10 o'clock. You get that spike up or that drop down, you could secure profit. Boom, I'm done for the day. Let me tell you, when I didn't use a cash account, I'd be like, oh, I'm up 42%. I'm killing it. Later in the day, all of a sudden, I'm like, shit, now I could sell. I'm deciding whether to sell at break even and take a day trade when I could have done that at 40%. I'm like, no, I'll carry it over. Up, lower, lower, lower. So please, cash account. Number 2 lesson, okay? When today is called Lotto Friday, right? Everybody's like, Lotto Friday, Lotto Friday. Yeah, DAX new all-time high, exactly. Lotto Friday, right? That doesn't mean you have to enter a lottery position that expires today. I already mentioned any options I'm buying, even though I'm scalping them, I want to be in, I want to be out today. I want to make $500. I want to call it a day, and I want to be done with stress-free, right? The point is, I'm going to buy 8-4 options, expiring 8-4. I don't know if it's puts or calls. Whenever I look at the market net flow, and I'm going to use Discord for that, I'm going to decide to go out to 8-4. Why? Because let's say I'm wrong today. Let's say I buy into some whatever calls. Palantir, right? Palantir got beat up yesterday. Let's say I buy into Palantir calls. I buy in at what I think is a dip. Now, remember, when I'm securing entry into whatever it is, I'm looking for a chart that looks like this, where I see a bottom if I'm going into calls, or a double bottom. Again, I don't want to jump in the first bottom because it can drop down. We can see a double dip. Remember that? We saw it yesterday. And now I got out of my AMD puts after the first dip, and I was like, okay, made profit. Now here's the catch. I'm a scalper, right? Those AMD puts that I was in yesterday went from $1. Actually, they're like $1.50, but my average was $1. The low on them was 67. So I was down 33%. So when it spiked back up to $1.30, $1.40, and I exited out, even though I said my exit was really wanting to be $1.80, I did not get $1.80. In fact, these went up to 2.25, those AMD puts. Now, the reason I decided to secure profit a little early, not to mention I'm a scalper, was because AMD was going up as the market was struggling. So when the market was going down, then AMD came down a little. The market would drop 1%, AMD would drop 0.5%. I knew I was slacking or trailing. And if it wasn't for that big fallout at the end of the day, anybody that held and didn't secure profit would have been in big trouble. Okay, with that said, what do I have on my agenda today? Again, 455.75 is where the SPY is pre-market. So, I mean, what's likely to happen? Oh, God, I'm such not a bull. What I would like to see is a double rejection at the top. Okay, because I'm afraid that the market might fade higher all day on lighter volume, meaning there's not really going to be all that many dips to get in. And if there is a dip, then you're basically putting risk on the table because you're expecting to fade higher, which means you're going to be in the option play for a longer amount of time. So my trading strategy is, we know on Friday that like Robinhood or Webull, a lot of these platforms make you exercise your option right at 3:30 p.m. They don't let you ride it longer. So what I'm expecting is, and here's how I'm going to trade the day, okay, if the market is fading higher and we see 460 on the SPY or 459 on the SPY, say 3:30 p.m., what I'm going to do is I'm going to get into some puts. I'm going to, not sure, SPY puts, but I don't know if it's going to be technology or whatever I'm looking at. I'm going to get into some puts because I'm going to expect the market to give back 2 or 3 points right at the end of the day. If the market's up, 7 points, we closed at 452 and we're sitting at 460. So we're up 7.5 points on the day, which is like 1.7 something percent. I'm going to expect a sell off at the end of the day, a 2-point or 3-point give back. So I'm going to go out a few days or go out till next Friday when I enter my position. But I'm probably going to wait, and it's going to be stressful for me today because we know I have FOMO. I love to trade. I love to trade often. I love to trade early. But since I slowed down my trading, I've had 22 straight winning trades, 11 straight trading days where I've been winning. Now, why should you join me on Monday? Let's go back to this past Monday. This past Monday, I suggested Boeing, the $212 calls that I think on Monday were as low as $4.53. Understand Boeing at at $36. What is it? Boeing's at $236. At $236, those contracts would be worth what? About $2,600 per contract. If your entry wasn't even the best entry on Monday, say you got in at $5 or $500 per contract, and now they're worth $2,600. Understand that's a 4x return, a 420% return. The previous week, I spoke about United Airlines. I dropped a video about it. I spoke about it on Monday. They had earnings on Wednesday. The stock was $55. It went up to $58 by the end of the week. Those $55 calls that were as low as 53 cents went to as much as $6. Again, a 400% return if you called the bottom. Me, I was in at $1.18. I didn't call the bottom, but it was part of my winning trades. Then going back to the previous Monday, I mentioned gold. Okay, gold was $180, spiked up to $182, $182.50. Those options went for 188% return. So again, please join me on Monday. I do my homework over the weekend. On Monday, I'm going to talk about one play that I'm looking to get in with part of my account and why I'm expecting 100% return. Okay, if you like what I do, please thumbs up, share this. Okay, we're going to talk about a couple stories, and then I'll mention a couple stocks. If you have any questions, please ask them on the sides. Let's see what we got today. Oh, that's just me. Okay, the Nikkei I mentioned, the DAX I mentioned. I was looking to get into Amazon today. That might be my play of the day. If I decide to trade sooner than that 3:30 or 3:50 p.m., which I told you was my strategy today, I might look for a nice dip on Amazon. If I can get in Amazon and I see the Qs dipping and I think we're going to have a recovery and we do something like a V shape, then I might get in. If we have a morning dip, I might get in and out of Amazon. Not that I think Amazon will be great all day, but I think if we see that morning dip, we might get that morning dip. I don't think we're going to see in the morning just fall. That's not what the market's going to do. If you zoom out, we're still in a bull run. We're still 5% from all-time highs. So again, any dip off this pre-market spike, I might look to make a quick Amazon call play. Again, you've got to watch for volume. You've got to watch for inflow. You've got to watch for support. I was in some Tesla. We'll talk about that another time. Microsoft, right? Again, I'm tracking the US dollar was 101. If you see 101.18 today, extremely bullish. If you see us push back to 101.90 or 101.80, extremely bearish. Those are my positions that I scaled out. The S&P hasn't dropped more than 1% now in 44 straight days. Okay, people will say, well, look what happened yesterday. Yeah, the crazy shit is the S&P didn't drop 1%. Futures were ripping yesterday, so we gave back the profit that futures were making to green, and then we went 0.7% red or 0.67% red, not a full percent. So now you're at 44 straight days. Chewy, I would stay the hell away from. To me, that's somewhat of a meme stock. I don't like their balance sheet. I don't like things that I've seen about the company. But is it a buy at 33? Possibly. Is it a sell at 37, 38? Possibly. I don't know enough about the company. That's all I know. It is on my watch list, but I won't trade it because the volume activity in Chewy isn't that great. Oh, here we go. Spotify, perhaps buy the dip or snipe calls. Again, you could do that with a Spotify probably. You could do that with a coin or Coinbase, right? Coinbase likes to drop substantially or just spike up. Even when Bitcoin is like hovering or even down a little, if the markets are up, they're ripping Coinbase higher. So you could do that. You could do it for a firm or Upstart. Again, these are more spec plays. Amazon's one that you can do that for. But again, I'm suggesting to everybody you go out till August 4th. I'm not suggesting to anybody you buy 0 days till expiration contracts. Those are extremely risky. Microsoft keep dumping. Okay, so I spoke about Microsoft the other day. I missed Microsoft puts yesterday at $2.60. They went up to $9 and change. They might even went up over $10 on that dip, that last dip. The point is, I could have made 300%. I missed by 5 cents. Here's what happened. 260, right? I put in 260. The bid was 255. It didn't sell to me. Then the bid was 260. I put in for 260, 265. Didn't sell it to me. Then the bid was 270. I thought I'd be too smart. I put in for 280. All of a sudden, I put in for 280. Now the bid was 280, and the ask was 290, then 290 and 3. I kept chasing all the way up. I tried 3 different order entries yesterday. It happens to all of us. I wasn't even willing to chase because I said, shit, Microsoft, I can probably make 100%. Even if I get it at 3, it'll go to 6. It went to 6. I probably would have sold, okay? No lie. I would have sold my Microsoft puts up 100%. It ended up going above $10, which would have been 200 and something percent. Yeah, Affirm, we mentioned that one. Again, on coin. Listen, the best thing, and if you guys want to be a profitable trader today, here's the greatest freaking advice, okay? And it's hard to do because we all want to end our Fridays and we all want to just make one trade in Friday morning, be correct, either ride it out the whole day and just keep looking at our phone and our accounts are going higher, or you want to just be done, which I do all, the time now. I'm like in 20%, I'm done. I'll look for another trade later on today. Or you can wait. So we all want to be done quicker, but the best strategy for me today, it's just going to be the wait. I'm great with patterns. I'm great with numbers. The more data I have to process, meaning the market opens, I look at volume, I look at if it's going up or down, then I make my predictions or my assumptions. Like, this is a good one. What was it? Shit, I can't remember the stock. There was a stock. It was like Palantir, but it wasn't so popular as Palantir. And I was looking at it the other day and I said, you know what? Worst case scenario, if this stock drops, it was like $17.22. I said it'll drop to $16.58. I looked at the low yesterday, $16.58. So when I do figuring and I look at patterns and things like that, and that's what I try and share on Discord. Yes, everybody can tell you, hey, the market's going up, the market's going down. But not everybody can tell you exactly price points that you think will be proper entry, the exact price points that you think will be a great exit strategy. For me yesterday, I thought the SPY was going to go to 458 and then reject there. So I based my exit strategy on the SPY going to 458. Now, what did it do? It actually went up to 458.50 before rejecting. So I was like, oh, God, I left some profit on the table. But what happened? It dumped. It dumped right to 457, then 455, then 454, then 452. So guess what? If you're one of those greedy pigs that are like still holding your contract, like, man, I get another 4 or 5%, plan ahead. Put in your order, plan ahead. But if you're being greedy about it, greedy pigs got slaughtered. They're probably hoping for a bounce. The really risky ones that had contracts that expired today, when they were getting slaughtered yesterday and they were off 80%, they doubled and tripled down, buying calls at a fraction of the dollar, and they're going to make out this morning because we're spiking way higher. But they put themselves at risk. So when you see returns on some people's accounts today of like 400%, and you're looking at everybody and they're like 300%, 400%, 200%, 900%, 800%, don't be shocked because yesterday they just dropped 80 or 90%. Okay, so don't get fooled, and don't get fooled by some of those gurus going like 400% today, because what they didn't show you is they were down 80% yesterday and their account was off 24,000 before they make, something like that. Yes, pigs get slaughtered. Totally take the 20%. Again, I used to actually, sorry, Romeo, I used to laugh at Romeo when he used to tell me he made 18%. I'm like, 18%? I made 180%. But you know what? Romeo was more correct. Taking the victories, never letting a trade go red. That's the best thing that I've ever heard from someone, from him. It's great. It's amazing. And he's right. So many times I've been looking at a trade, it goes red, and then I go, okay, I'm going to wait for that bounce, for it to bounce back up. We all do that shit. I was up 40%. Now I'm flat. I'll just wait and take 20% when it bounces higher. Okay, instead of 20% higher, now you're down 13%. Now you're saying, shit, I would have took break even. I might be wrong about this trade. Break even would have been fine for me to get out. Let me see if I get a bounce to plus 1 or 2%. And instead, from 13%, now you're down 22%. And you say to yourself, well, I was up 40%. Now I'm down 22%. This trade obviously is not going in my direction. The smart devil on my shoulder says, just sell. Take the freaking loss, you idiot. The dumb guy says, nah, you know what you should do, dude? Buy 20 more contracts. That's the smart thing. When you get that bounce back to even, you'll be up 40% again. So again, please trade smart. If you like my stories, thumbs up. Join me on Monday morning. I'm going to talk about my one trade of the week. Again, last 3 trades, 400%, 240%, and 150%. Those are the past 3 Mondays. Results, past results do not guarantee future results, but join me Monday. We'll see how it turns out. Everybody have a great weekend. I'll be over on Discord shortly. And that's about it.